Here's a tough question. How can I protect my family financially if something happens to me? It's not something we like to think about, but it's a question every provider needs to answer. The good news, there are practical steps you can take right now to make sure your loved ones are secure no matter what life throws you. In this video, I'll walk you through exactly how to protect your family financially if something happens to you. Here's why this is so important. If you're the primary provider for your family, they rely on you, not just the day-to-day bills, but for their future security. Losing a loved one is hard enough without the added burden of financial uncertainties thrown on top of them. The truth is, many families are unprepared for the unexpected and can lead to overwhelming stress, the debt, and even loss of their home. But it doesn't have to be this way. With a little planning, you can give your family the peace of mind they deserve. Get the right life insurance. First things first. The life insurance is one of the simplest and most effective ways to protect your family. But not all policies are created equal. So here's what you need to consider. A term life insurance policy is often most affordable and straightforward option. It provides coverage for a specific period, like 20 to 30 years, which is usually enough to cover your family until your kids are grown and your debts are paid off. If you're looking for something with lifelong benefits, a whole life or universal life policy might be a better fit. These policies cost more, but they also build cash value over time that you can borrow from. Either way, the goal is to ensure your family has enough to cover immediate expenses like funeral costs and long-term needs like mortgage payments and college tuition. Another area to look into is creating a will or a family trust. Life insurance is essential, but it's not enough on its own. You also need a clear plan for how your assets will be managed or distributed. Depending on your financial situation, that could mean creating a will or setting up a family trust. A will is a straightforward way to outline your wishes. It lets you decide who inherits your assets, who takes care of your children, and how your estate is managed. However, it's important to know that a will must go through probate, a legal process that validates your will and oversees the distribution of your assets. Probate comes with heavy costs, both financial and emotional. It often involves attorney fees, court costs, and delays that can tie up assets for months and even years. If you want to avoid probate, a family trust might be a better option. Trusts allow your assets to pass directly to your beneficiary without going through probate, saving your family time and money. Trusts also provide more privacy since probate records are public, while trusts remain confidential. And if you have specific conditions for how your money should be used, like funding your kids' education over time, a trust gives you more control. Other side of this is building an emergency fund. Creating an emergency fund is a key. Think of it as financial safety net for your family. While life insurance and estate planning take care of the big picture, an emergency fund handles the immediate needs. How you can do that? Aim to save 3 to 6 months worth of living expenses in a separate, easily accessible account. This ensures your family has quick access to cash for things like rent, utilities, and unexpected medical bills. Even small contributions add up over time. The key is to start now and make it a consistent part of your budget. It's one of the best ways to give your family a financial stability. No matter what happens, you might be thinking, do I really need all of this? The answer is yes. And here's why. Each of these steps, life insurance and will or trust, an emergency fund covers a different part of your family's financial safety net. Together, they create a comprehensive plan that protects against both short-term and long-term risk. Life insurance provides that lump sum to replace your income. A will or trust ensures your assets go to the right people in the right way, with trust offering that added benefit of avoiding the costs and delays of probate. And an emergency fund gives your family that immediate financial breathing room. It's about covering all your bases, so nothing slips through the cracks. We know a gentleman who wanted to ensure his family would be secure if anything ever happened to him, but he didn't know where to start. So he began setting up a term life insurance policy that would cover his mortgage, his kids' college tuition, and daily living expenses. Then he worked on his estate plan, deciding that a family trust would be the best option for his situation. This allowed him to set up specific conditions for how his assets would be used, including paying for his kids' education over time. Finally, he built an emergency fund with 3 months of expenses. Sadly, he passed away unexpectedly, a few years later. But because he had a plan in place, his family didn't face financial hardship. They were able to stay in their home, cover their kids' education, and focus on healing without worrying about money. Stories like this are a reminder of how powerful planning can be. So how do you protect your family financially? If something happens to you, start with these 3 steps. Get the right life insurance. Create a will or a family trust depending on your financial situation. And build an emergency fund. Together, these steps ensure your loved ones are taken care of no matter what the future holds. If you're ready to create a financial plan for your family, go start today. And if you want additional information about our lessons learned, click the link below to schedule a call, and we'll help you get started on what we've experienced so you can go out and do the same. Don't forget to like this video, subscribe to the channel, and share your thoughts in the comments. What steps you taking to protect your family?